Very interesting to see the response by Old Mutual to our story last night. Remember, Mark Wayner said that Old Mutual didn't sell to Wayner's company, to Madison, to Hyprop. They found someone else to sell to at 30 million rand less. And all that happened was Mark Wayner then went and did a deal with those guys. But policyholders of Old Mutual have lost 30 million rand. They've come back to us with possibly the most arrogant response I've ever seen. They said, well, it was they were entitled to do it. And that was their decision, their strategic decision. So basically, we're not prepared to talk to you about it.
They say they don't sell to competitors. I read, why would Mark be a competitor? Everybody's a competitor. Every day I sell shares to competitors. I can't understand their reasoning and, behind that. Look, there may be other reasons why they did, but what difference is it's now gone to Mark.
Anyway.
So the deal was flipped. And it went to Mark. So
people forget when they work for these big institutions, it's not their money, it's retirees' money, it's pension funds' money. It's not, they don't own that. They don't have the right to make that kind of stupid decision. And to stick to it and saying, well, our arrogance is, in their own arrogance, they say, well, it's our money and we'll make that decision.
I think the other point that I made, I know Denise, your journalist Denise spoke to me, and I said, maybe immaterial or not material in the grand scheme of things, but a lot of these not material deals add up and become material.
I think there's probably everybody listening to this programs now saying, I could do with 30 million rand. Couldn't you, Dad?
Well, Mark loved it. I mean, Mark's great.
No, it's a sign of the times. I think it's well worth going and reading that story by John Bolger, which we published on Moneyweb, a speech that he made about how capitalism just seems to have gone completely off track. Interesting. Did you follow much of what the new Minister for Planning, Trevor Manuel, had to say in the medium-term strategic framework today?
I read it. Sure. I think there's a lot. 2010 was our original target. Now it's gone out to 2014. I think it's very, very ambitious what they're trying to achieve.
It's a 5-year plan, I guess.
Well, a 5-year plan's 5 years. It's very easy to set 5-year plans, but I think there's a lot that this economy has to deliver in order to get there, and I think they've got to upgrade skills. It's a huge ask to get to where they want to get.
The key part of that, perhaps, or concrete part, is that the national health insurance system is going ahead. It's coming. It's not going to be sidelined.
But you need a strong base against that. You need to employ people in order to fund that. Otherwise, it's just going to be funded. It's going to be more and more demand on the few taxpayers that there are.
Well, you wonder if the road accident fund has been such a disaster. Why will this now not be a disaster?
Yeah, I don't know. I can't answer. I think these are issues that, it's very well to have plans and that, but I think you've got to deliver on them, and I think we've got a long way to go on that.
But investors aren't worrying about any of this. The share market very strong today.
Of the top 80 shares that I monitor, 75 were up, which I haven't seen for a long time. Only 5 shares were down, so there was widespread buying. And also we saw an appetite for some of the more marginal shares, particularly in the mining side. A lot of the marginal platinum shares came up. Also retailers in demand. What triggered it was the Goldman Sachs results in the United States, which I think everybody believes is a sign that we're seeing a turnaround. But most of that was made of trading on very cheap income that they got from the US government. Yeah, so anyway, I can live with markets going up. It doesn't offend me in any way at all.
It might offend a few American taxpayers, though. $3.5 billion in a quarter, dollars, that is, 65% up Goldman Sachs. And as you say, by using the government's money to trade it.
48% of the 13 billion or 14 billion goes to remuneration.
One of the big losers of the past few years on the JSE has been Supergroup. Today it came out with an announcement to say it's looking to, there's an offer to buy the company. The share price is very strong at 62 cents compared with
where it was. Yeah, I'm sure they'll break that company up and start to look. People will start to bid for some of the quality companies.
So if you own the shares, just
I would stick with it at these levels. It's an option on the